going to help you make an important decision. Should you continue to stay in your tech stocks? Should you continue to buy tech stocks? Let's start with some good information so you can make that judgment. If you recall, going back in September of 2024, if you look at my chart here, that was a year ago. The Fed cut rates by 55 basis points, intending for the 10-year Treasury yield to drop. And that's a good thing because the 10-year Treasury yield is connected to your mortgage payment, credit card payment, vehicle payment. When they come down, even the national debt interest, yeah. So you want it to come down. But it went up instead of going down. Now, make sure you write these numbers down. The 10-year Treasury yield in September 2024, when Powell cut those rates, was 3.6%. 3.6. Now, everybody jumped in and kept buying tech stocks. So it went up 20%. We had a 20% rally. But when we hit February 2025, something happened. Rates were 10-year Treasury yields now went from 3.6 to 4.8. 3.6 to 4.8. What happened? The big institutions dumped their tech stocks. We had a 20% crash. Why? Because interest rates went up big. The 10-year went from 3.6 to 4.8. So we had a 20% crash. So where are we today? Now, here we are a year later, same thing. Powell said, I'm going to cut rates, and we're going to bring the 10-year Treasury yield down, make everything cheaper for you. But the same thing happened. Yields went up. Should you still be buying these tech stocks? Now, if you bought this tech stocks a year ago and interest rates in the 10-year Treasury yields at 3.6, we had a nice 20% rally. But if you start buying this year, interest rates were starting now at 4.1. That's a big difference to starting at 3.6. So think of it this way. 3.6, everybody was buying the tech stocks, but they stopped buying when it hit 4.8. We had a 20% crash. Year later, here we are. You're still in tech stocks or you decide to buy. Here's what you got to think about. This is the decision you got to make. Should I continue to stay in my tech stocks or should I start buying tech stocks when I know the rate now is 4.1? Last year, when they got the 20% rally, it was at 3.6. So instead of starting at 3.6, I'm going to be starting at 4.1. And the market turned into a 20% crash with the stocks, with tech, when it hit 4.8. So you're starting already at 4.1. So and last year when it hit 4.8, it went down 20%. So do you think you should be buying tech stocks when you have the knowledge that the market corrected 20% when we hit 4.8, and now you're starting not at 3.6 again, but at 4.1. And also, understand this, tech stocks that are leading, their earnings and valuations are judged differently than all other industries. Because see, tech stocks, tech companies are innovative. And they build a lot of products. It takes a long time to get these products out. So their valuations, their earnings, their profits is judged further out. All the other companies are immediate now. But tech companies, because those products take a long time to get out, and they have to borrow a lot of money, the problem becomes as interest rates start going up, and the evidence is when we went from 3.6 to 4.8 in a market crash, when interest rates go up and they're borrowing money like crazy, and remember, when they borrow money, the value of the dollar is going down. The purchasing power of that dollar is going down. So immediately when all these tech companies borrow money, they're already losing because the dollar value is going down. So, and the more these rates go up, the more it hurts these tech companies. So, and again, remember, their earnings and their valuations are judged way out in the future. So that means as these rates climbed like they did from 3.6 to 4.8, the same thing can happen. But this time we're already starting out much higher at 4.1 instead of 3.6. So there's something to think about here with these tech stocks that are leading. Remember, it's just a handful of stocks. It's Google, Amazon, Nvidia, and Microsoft that's really leading the market. That's it. And why? Because it's all stock buybacks. I gave you last week, for example, over the last 5 years, Apple bought something like $460 billion. Meta bought something like $177 billion. Nvidia about $82 billion. If they didn't have those stock buybacks, would these stocks continue to go up? No. No, because who's the biggest buyers of these stocks? The companies. So when their companies buy their own, they're the biggest buyers. The second biggest buyers are the retail investor who doesn't know what he's doing. He's not a professional. Okay, he's not a professional. He doesn't know what he's doing. He's following the herd mentality. So the point is that before you, now I'm not saying that the tech stocks can't keep going up, but common sense tells you if they crashed at 4.8 and we're starting out now at 4.11 instead of 3.6, it's a high probability we're not going to get too far. But it's okay if the market, we're in Nvidia, we're in Apple, our gang members are up big in tech stocks. But we know one thing, that we can tell, because we don't follow fundamentals, we follow the money. And we have the ability to identify at least a month or at least 2 weeks in advance if the tech stocks are going to turn and drop, just like when we shorted back here in February of 2025. We knew 2 weeks earlier that let's get ready to turn short. If you know how to follow the money and know how to sell short, sure, stay with them. But if you don't know how to identify that these tech stocks or the market's going to turn around and go down, if you don't follow the bond market, that's where you got to get it from, the bond market. If you don't know how to do that and you don't know how to sell short, you're taking a big risk, okay, buying tech stocks when they're already over 4%, okay, 4.1. And last year they crashed to 4.6, I think it was 4.8. So I hope this helps you make a decision, okay? Can tech stocks keep going up? Sure they can, as long as they keep printing money and keep giving money to the CEOs, keep doing stock buybacks, they can keep going up and up. But at some point, remember what happened back in February 2025 when we hit 4.8, went down, okay? So just something to think about, all right? So my name is Phil Grandy, okay? And I'm CEO of philsgang.com, a stock trading education group. It started in 1998. We'd be happy to help you. Okay, you have our stock picks, our training. Love to help you. Check it out. See you on the charts.